took up around 0.3%. Well, as we wrap up on the show, we leave you with some global opinion coming in from Jahangir Aziz of JPMorgan on how the revision in Q3 GDP weighed down on the US markets and how China's growth picture looks going forward.
What drove the market down today, it was the revision in the third quarter GDP in the US and the fact that the first-time claims were not as high as people had thought. And I think that goes to show you that, the market had probably brought into the idea that the Fed was probably, close to being done. But clearly, this is moves towards what the Fed has been telling us in FOMC meeting after FOMC, that they are not close to done, even though they have downshifted. Along with what the uncertainty around Fed, even though the Fed has been very clear about where they want to take the terminal rate to. So we have a view that, in the first half of next year, China is probably going to struggle to generate any positive growth. And in the second half of the year, once they're able to acquire some form of natural immunity of about 35–40% of the population, and that's a very tall task. Once that happens, you are going to see China reopen and China growth actually pick up very strongly. And I think that's the time when you are going to see materials prices, industrial metals prices actually move up.